The biggest tax overhaul in decades is now fully in effect, and most Americans have no idea how it changes their paycheck. The One Big Beautiful Bill Act was signed into law on July 4th last year, and right now, in June 2026, every single provision is hitting your taxes, your income, your deductions, and your retirement. Some of these changes save you money. Some of them are about to expire, and you only have 19 days to act on one of them. And at least two of them could save your household thousands of dollars this year alone. Today, I'm going to break down the 7 changes that matter most to your personal finances right now. No legal jargon, no political spin, just the facts that affect your wallet. Let us get into it. Welcome to Capital Roost, where we break down what financial news actually means for your life. Before we get into the 7 changes, here is the context you need. The One Big Beautiful Bill Act is an 870-page law. Most of it is business and international tax policy. But buried inside that bill are provisions that affect your standard deduction, your overtime pay, your tips, your property taxes, your retirement, your estate plan, and a deadline that most people are completely unaware of. We are going to focus entirely on the 7 things that matter most if you are a working American in your 40s. Here is what we are covering today. Change 1, a bigger standard deduction made permanent. Change 2, no more taxes on tips or overtime. Change 3, the SALT deduction explosion. Change 4, a $6,000 bonus for Americans 65 and older. Change 5, the 19-day deadline you cannot miss. Change 6, new rules for freelancers and side hustlers. And change 7, the biggest estate tax change in a generation. Let us start. Change number 1. Your standard deduction is now permanently higher. Under the old tax law, the higher standard deduction from the 2017 Tax Cuts and Jobs Act was supposed to expire. The One Big Beautiful Bill makes it permanent. For 2026, single filers get a standard deduction of $16,100. Married couples filing jointly get $32,200. This means more of your income is shielded from taxes before you even start calculating what you owe, and it is now permanent, not expiring in a few years. Change number 2. No federal income tax on tips or overtime, for now. This is one of the most talked about provisions of the entire bill. If you work in a job where you earn tips, those tips are now temporarily exempt from federal income tax. If you earn overtime pay, that overtime is also temporarily exempt from federal income tax. This applies for the 2025 through 2028 tax years. Now, a critical note, this does not apply to everyone. There are income limits, and the exemptions are temporary, not permanent. But for workers in hospitality, food service, healthcare, and retail who regularly earn tips or overtime, this is real, meaningful money back in your pocket. SALT stands for state and local taxes. Under the old law, you could only deduct up to $10,000 of your state income tax and property taxes from your federal return. Under the One Big Beautiful Bill, that cap jumps to $40,000. That is a 400% increase. For homeowners in high-tax states, California, New York, New Jersey, Illinois, Massachusetts, this is a massive change. If you pay significant property taxes and state income taxes, you may now be able to itemize your deductions and save substantially more than you could under the old law. The $40,000 SALT cap runs through 2029. Change number 4. A $6,000 bonus deduction if you are 65 or older. This is one of the least covered provisions of the entire bill and one of the most valuable. Americans who are 65 years or older receive an additional $6,000 deduction for the 2025 through 2028 tax years. If you are married and both spouses are 65 or older, you get $12,000 combined. And here is the powerful part. This deduction applies whether you itemize or take the standard deduction. You do not have to choose. You get both. For retirees and near retirees, this is direct, meaningful tax relief on top of everything else. Change number 5. The 19-day deadline you cannot afford to miss. This is the most time-sensitive item in this entire video. The One Big Beautiful Bill terminated the federal tax credit for EV charging equipment and alternative fuel vehicle refueling property. Under the old law, you could claim a tax credit of up to $1,000 for installing an EV charger at your home. That credit is now officially expiring on June 30th, 2026. That is 19 days from today. If you have been considering installing a home EV charger or any qualified alternative fuel refueling property and you want to claim the federal tax credit, you must have the equipment placed in service before June 30th. Not ordered, not contracted, placed in service. That means installed and operational. If you miss June 30th, the credit disappears permanently. If this applies to you, contact your installer today. All right. You now know the 7 changes. Let me tell you exactly what to do with this information right now. Action 1. Call your tax professional today. The One Big Beautiful Bill changes enough of the tax code that your old filing strategy may not be optimal anymore. The higher SALT cap, the tips and overtime exemption, and the 65-plus deduction all require you to recalculate whether itemizing or taking the standard deduction saves you more money this year. Action 2. If you have an EV charger project pending, act immediately. June 30th is 19 days away. If you want that up to $1,000 federal credit, the equipment must be installed and operational before that date. Call your installer today. Action 3. If you earn tips or overtime, verify your employer is applying the exemption. Not all payroll systems have been updated for the tips and overtime exemption. Talk to your HR department or payroll team to confirm your employer is correctly applying this provision. Action 4. If you are a freelancer, keep tracking all your income. Even though the 1099 threshold is now $2,000, every dollar of freelance income is still taxable. Keep clean records throughout 2026. Action 5. If you are 65 or older, ensure your tax preparer knows about the $6,000 bonus deduction. It is easily missed and not widely publicized. Bring it up proactively. Change number 6. New rules for freelancers and side hustlers. If you earn income outside of a regular W-2 job, this affects you directly. Under the old law, any platform or client that paid you more than $600 per year was required to send you a Form 1099. Under the One Big Beautiful Bill, that threshold is now raised to $2,000. This means that if you earn less than $2,000 from a single client or platform in a year, they are no longer required to send you a tax form. Here is the critical warning. You are still required to report that income on your tax return. Not receiving a 1099 does not mean the income is tax-free. It just means the paperwork burden is lighter. But the IRS still expects you to report every dollar you earn. Change number 7. The biggest estate tax change in a generation. If you have assets to pass on to your children or grandchildren, this matters enormously. The estate tax exemption has been permanently raised to $15 million per individual. For married couples, that is $30 million combined. That means unless your estate is worth more than $15 million, your heirs will pay 0 federal estate tax. Under the old rules, this exemption was set to fall back to around $7 million after 2025. That reduction is now permanently canceled. For most families watching this, the federal estate tax is no longer a concern at all. But for those who have built significant wealth, this change transforms your long-term estate planning strategy. Let me bring it all together. The One Big Beautiful Bill is now fully in effect. And here are the 7 changes that matter most to your personal finances. 1. Standard deduction permanently higher at $16,100 for singles and $32,200 for married couples. 2. No federal income tax on tips or overtime through 2028. 3. SALT deduction cap raised from $10,000 to $40,000 through 2029. 4. A $6,000 bonus deduction for Americans 65 and older through 2028. 5. The EV charger tax credit expires in 19 days on June 30th. Act immediately if this applies to you. 6. The 1099 threshold for freelancers raised to $2,000, but you still owe taxes on all income. 7. Estate tax exemption permanently raised to $15 million per person. 34% of Americans, 88 million people, are currently describing their finances as struggling or in crisis. Understanding every legal way to reduce your tax burden this year is not optional. It is essential. If this video helped you, please give it a like. It genuinely helps this channel reach more people. And if you want clear, honest financial guidance every Thursday and Sunday, subscribe to Capital Roost. See you Sunday.